The United States dollar Swiss franc analysis for September 15th to 20th, 2025 highlights key foreign exchange market trends. The pair's performance was influenced by economic indicators and geopolitical events. Traders observed fluctuations driven by interest rate expectations and market sentiment. Understanding these dynamics is crucial for making informed trading decisions in the foreign exchange market.
Let's begin by looking at the current price information for USD/CHF. As of our latest data, the pair is trading at 0.79538 Swiss francs, showing a modest daily gain of 0.36% or about 28 pips. The previous close was at 0.79254, and we've seen a daily range between 0.79110 and 0.79663. Looking at the performance chart on the right, we can see that while USD/CHF has shown a slight positive movement in the last 24 hours, the broader trend remains bearish. The pair has declined 0.22% over the past 5 days, 1.05% over the past month, and a significant 12.26% year to date. This clearly indicates that despite recent stabilization, the Swiss franc has been strengthening against the US dollar throughout 2025. The most significant market-moving event during our analysis period was the Federal Reserve's interest rate decision. The Fed announced a 0.25% rate cut, bringing the funds rate to 4.0 to 4.25%, its lowest level since November 2022. However, what's particularly interesting is that despite this rate cut, the US dollar actually rallied afterward. This was due to the Fed's commentary being interpreted as less dovish than anticipated, with a hawkish surprise regarding the 2026 outlook. Other important news included the Bank of Japan signaling a potential hawkish tilt, with 2 members voting for a rate hike and an announcement to pair ETF holdings. This caused a surge in yen strength against major currencies. Meanwhile, the Bank of England held rates steady, providing some support for the sterling. Our technical analysis draws from multiple sources to provide a comprehensive view. Action Forex noted that after a dip to 0.7828, USD/CHF recovered strongly, suggesting a short-term bottom may have formed. Their analysis places the initial bias mildly on the upside, targeting 0.8006 resistance. Daily Forex highlighted the 0.7900 level as a critical support area, describing it as a potential double bottom. Their analysis suggested a potential sell signal if the pair breaks below 0.7900, with a target of 0.7500. Investing Live showed USD/CHF was boxed in between its 100 bar and 200 bar moving averages on the 4-hour chart, indicating a neutral bias with the market waiting for a directional catalyst. The key technical levels to watch are critical supports at 0.7828 and 0.7900, with key resistance at 0.8006, 0.8067, and 0.8170. For those considering short positions, a stop loss at 0.7970 is recommended, with a downside target of 0.7500 if support breaks. For the short-term outlook covering the next 1 to 2 weeks, we anticipate USD/CHF to trade within a range of 0.7828 to 0.8067. On the chart, you can see historical price action in gold, with our projected range shown by the dotted line. In the bullish scenario, a sustained break above 0.8006 would confirm the short-term bottom and open the door for a test of the 200 bar moving average around 0.8067, potentially extending to 0.8170 if momentum builds. Conversely, in the bearish scenario, failure to hold above 0.7904 would invalidate the bullish outlook and lead to a retest of the recent low at 0.7828. A break below this level would signal continuation of the broader downtrend. The key levels to watch are immediate resistance at 0.8006, secondary resistance at 0.8067, critical support at 0.7904, and major support at 0.7828. These levels are marked on our chart and will likely act as decision points for the pair in the coming days. Looking at the medium-term outlook for the next 1 to 3 months, we project a wider trading range between 0.7500 and 0.8332. The chart shows historical data in white, with our primary projection in gold and the upper bound scenario in a lighter gold shade. The key resistance level at 0.8332, which represents the 2022 low, is particularly significant. As long as the pair trades below this level, the long-term downtrend remains firmly in place. On the downside, we're watching 0.7500 as a key support target identified by daily Forex, with a longer-term projection of 0.7382 from Action Forex if the bearish trend accelerates. The medium-term outlook remains bearish within the context of the long-term downtrend from the 2017 high of 1.0342. Any rallies should be viewed as counter-trend moves within a larger bearish framework unless we see a decisive break above 0.8332. Based on our comprehensive analysis, here are our trading recommendations. For those looking at bullish opportunities, consider buying if price sustains above 0.7904. Target the immediate resistance at 0.8006, with potential extension to 0.8067 and 0.8170 if momentum builds. Set your stop loss below 0.7828 to protect your position. For bearish scenarios, consider short positions if price breaks below the 0.7900 support level. Your initial target would be 0.7828. with further potential to 0.7500 if the downtrend resumes. Place your stop loss above 0.7970 to manage risk. Be aware of several risk factors that could impact this pair. Monitor upcoming economic data releases, Fed commentary, and shifts in global risk sentiment. The pair remains sensitive to changes in interest rate expectations and safe haven flows. Also, potential Swiss National Bank interventions could create unexpected volatility. As always, remember that this analysis is for informational purposes only and does not constitute financial advice. Trading foreign exchange carries significant risk and may not be suitable for all investors. Thank you for watching our USD/CHF analysis. If you found this information valuable, please like, subscribe, and share your thoughts in the comments below. Until next time, trade wisely.